Hello, this is Hong, CEO of OKCoin. I'm very pleased to have Michael Saylor here with me today, who is a renowned entrepreneur and investor in Bitcoin. Hi, Michael. How are you?
Thanks for having me. Happy to be here.
The first question I want to ask and discuss with you is, in 2020, we've seen a lot of difference versus, say, 2017 cycle with Bitcoin and other crypto assets. A major difference is that a lot of institutions, including MicroStrategy, which you have founded and led, put money, real money into Bitcoin, along with companies like Square. But different from Square, you actually all in Bitcoin. So one thing I want to discuss with you is when you make that decision, right, putting all the treasury money into Bitcoin, what are the internal pushback that you've got, if any, and how did you exactly address those concerns?
Well, I think that the reason we decided to do it was because 2020 was an inflection year. And up until 2020, you had a minor monetary inflation problem. Money was expanding maybe by 5% a year. And then you had an overarching dynamic of the mobile wave, the expansion of Apple and Amazon and Facebook and Google and cloud computing that dominated the narrative, and it dominated the strategy of tech companies. I think that in March of 2020, the world inverted, and you saw an acceleration in monetary expansion from 5% to 25%, it looks like now. And a lot of reasonable people think that that monetary expansion rate will go at 15% or more for the next 5 years. So a minor issue became a major issue in March. And at the same time, the mobile wave sort of came to an end. You could say that by 2020, the mobile web was over. Apple had won, Amazon had won, Facebook had won, Google had won, Microsoft had won, right? In 2010, these were all questions and they were debatable. And the issue was, how do you ride it? But by 2020, it became clear that had been resolved. So we decided that we needed to do something with our treasury because we were sitting on all cash. Not really a small problem for a decade, a 5% dilution each year. The cost of capital is 5%. A massive problem in 2020 when it becomes a 25% dilution. And a problem impossible to ignore looking out over the next 5 years, because at 15% monetary expansion, you, in essence, lose 75% of your purchasing power over the decade. So when we got to that point and started grappling with it, and by the way, we were probably more sensitive than many companies because we were very cash rich. I mean, other companies that didn't have any cash wouldn't have a problem. If I took away your cash, you wouldn't have the dilemma of watching the shareholder value deteriorate. But if I gave you a bunch of cash and then I accelerated the monetary expansion rate from 5% to 25%, and if you were a fiduciary, you would realize you have an issue.
Yeah.
So we saw the problem maybe sooner than some people. We're a more nimble company. The company has 5 directors on the board, myself and 4 other directors. So it's possible to have a full duplex high bandwidth conversation with 4 outside directors, a general counsel, and a CFO. And maybe if you had 25 or 20 outside directors, it would be very difficult to have that conversation. So I would say that, what are the challenges to overcome? Well, the challenges to overcome are quantifying the risks of taking the action versus quantifying the risk of not taking the action. Mm-hmm. And then to do the accounting analysis, the legal analysis, and then to educate and to engage in a consensus process that includes some accountants, some lawyers, some officers, some directors, and to do it in a a fixed amount of time while you can still do something that makes a difference. So you want to boil that down, I would say the biggest challenge for us was just education, just learning, and education in macroeconomics. Most directors and officers of publicly traded companies don't have to become macroeconomic investors or have an opinion on the M2 monetary expansion rate. It wasn't a requirement, and no venture capitalist that was recruiting for someone to run a tech company or any company would have said, you know, what's your opinion of the Federal Reserve's monetary policy for the next 5 years? Traditionally, we've always looked for executives that were good at building and selling the product and the service in question. But that's in the US and Europe. I would say that if you had experience doing business in Venezuela or Argentina or any other country or Russia, you would actually have had to be much more geopolitically sophisticated and economically sophisticated, because then you would realize that in fact the decision to actually open up a business in Venezuela, no matter how good the product or service is a money-losing proposition because of things having nothing to do with the product or the service. And so some businesses are more sophisticated, but in America, I think we became very comfortable with the stable currency, the world reserve currency. And so it wasn't really an agenda item in the last decade. And that's why the challenge is to learn something new, right? To grasp new, to take on new subjects at the board level in a thoughtful fashion.
Do you have an exit plan for Bitcoin investment at the corporate level?
Once you understand what the problem is that you have a treasury and the treasury has assets on it. And if the treasury is holding cash or fiat currency, and if the cash is losing its monetary energy, the only way to convert back into that asset is if the cash stops being debased. So I don't see it as, there is no exit plan. To say, do you have an exit plan for how you're going to invest your treasury is like going to a general partner of an investment fund. If you ran $1 billion investment fund, if you're a money manager and you were invested in stocks, you would never say to the money manager, do you have an exit plan to stop investing in stocks? Well, what? Well, something better than stocks. Are you going to, there is not a single money manager that would convert all of their money from stocks or equity back into cash.
Right.
They would be out of business. If you were running a convertible debt fund, you said, do you have an exit strategy? Well, you mean, am I going to shut down the fund and stop investing? No. I mean, the only time I'm going to have an investment, the exit strategy to stop investing in stocks would be when you believe that you can no longer generate a reasonable yield on stock investing. And the exit strategy to stop investing in debt would be when you feel that there is no debt that is going to appreciate or no way to generate a decent yield. And if you went to someone investing in real estate, you said, do you have an exit strategy? Do you mean like when people will no longer need real estate anymore? And if you went to someone running any business and said, do you have an exit strategy? Well, the exit strategy is when I stop believing in the business. If you went to Harvard University and said, do you have an exit strategy? What, when we're going to stop educating people? No. So do I have an exit strategy for our treasury? No, because I don't intend to decapitalize the company, right? You would have to say it a different way. Do you think that there's a better strategy than investing in Bitcoin for your treasury?
Of course.
Well, if I think that Bitcoin is going to be accretive and go up 20% a year, 100% a year, whatever the number is, the only strategy would be a transition strategy to invest in something better, a better asset. So the real question is real estate a better asset than Bitcoin? And the answer is no. Are stocks a better asset than Bitcoin? The answer is no. Are bonds a better asset than Bitcoin? The answer is no. Is cash, is euros and dollars a better asset than Bitcoin? The answer is no. So I guess the answer to the question would be, when there's something better to invest our treasury in than Bitcoin, then we will consider it and act rationally and appropriately.
Yeah. At this point, why, when you look at, for example, equity, public stock, right? How would you compare that to Bitcoin? You know, take Tesla stock, for example. It's a superstar last year, and it seems to continue to go up.
I think if you look at the world from the point of view of an investor, let's say I have, this $300, $400, $500 trillion of money that investors have, monetary energy. They're looking for a way to preserve their wealth. In order to preserve wealth, by definition, you have to generate a yield or an appreciation in excess of the cost of capital. What's the cost of capital? In an environment where there is zero currency printing, the cost of capital would probably be zero. In an environment where the cost of no assets, there's no additional money. So if the cost of capital is zero, then anything that generates a positive yield is going to preserve your wealth. The cost of capital, or the surrogate for it that's most reasonable, in my opinion, is the M2 monetary expansion, or the expansion of the broad money supply. When the money supply is expanding at 5%, the cost of capital is 5%. When the money supply is expanding at 15%, the cost of capital is 15%. Therefore, every investor has got to find investments that will actually appreciate in price or generate a yield in excess of the cost of capital, 15%. So bonds, stocks, and commercial real estate are all held. Sometimes they're held as trophy assets. Like, I just want to say I own it, even though it's never going to make me any money. Like, an example of that would be maybe a sports team. Like, if I owned a professional sports team, or if I owned some other thing, just to say I owned it. But let's say you're a rational and different investor. Then you're owning something based upon the discounted value, the cash flows. So either discounted value of the rents, the discounted value of the bond coupon, or the discounted value of the dividends, or the discounted value of the cash flows that are going to be held as retained earnings on the balance sheet of a company, or the fact that the company's going to generate cash and they're going to use it to buy their own stock back. All of those are just surrogates for discounted cash flow. So stocks are fiat derivatives, right? If you have $1 billion, you can either hold $1 billion in cash, and if the money is losing 15% of its purchasing power a year, then over 10 years, you lose 3/4 of your wealth. If you take the $1 billion and you buy a stock, which is a value stock, valued based upon its cash flows, you bought a fiat derivative, the cash flows are going to lose 15% of their value every year. And so in 10 years, the cash flow generated by the company is going to be worth 25% of what it'd be worth today. You have the same exact problem, right? The only way you get around that is you find a company and you buy a company that's growing its revenues and cash flows, probably its cash flows, faster than the cost of capital. So if I can find a company that can grow its cash flows 20% a year, then I can hold my wealth. But at the end of the day, in a monetary expansionary environment where the cost of capital is 15%, if you show me an equity growing 20% cash flows every year for a decade, and that's the forecast, you have to tack on a risk premium of 5%. And so at 20% cash flow appreciation against a 15% cost of capital, there is not going to be any wealth creation. The best that can happen is, with normal execution, you'll preserve your wealth. And I don't think that's a very good idea, right? Because 95% of equities aren't going to grow their cash flows 20% a year for the next decade. They don't have a forecast to do that. And the ones that do will probably run into monopoly regulatory risks, which are challenging. So if I was holding a treasury, if I'm a macroeconomic investor, if I'm an investor right now and I had $1 billion worth of bonds, it's a crowded trade. The likelihood that they're going to go up in value by a factor of 10 is very low. they're likely to be plus or minus 20 or 30%, and they're going to vary. And there is a risk, because they're fiat derivatives, that they're going to be severely impaired in a monetary collapse. And that's the problem with stocks, I think. By the way, Hong, which is totally different than 10 years ago. 10 years ago, I made substantial investments in Facebook, and I bought it at $12 a share. To that now, like, I was sure it was going to go to $100 a share when I bought it. There was no doubt. I bought stock when it was $3 a share, and I wrote a book about it. And I was sure that one day billions of people would have mobile phones, and a billion people would be on the iOS network. And I was sure that they would get their photos and their music and their everything else with Apple. And if you knew it, you knew it. So it used to be that those investments were going to be 10x returns with some risk and volatility. There's nobody on the planet, I think, that believes that Apple, Amazon, Facebook, and Google are going up by a factor of 10 anytime this decade. I think that run is done. And so equities have a challenge if you're an investor, whereas Bitcoin is not that. Right now, the logical value of a Bitcoin monetary network, right? A Bitcoin is the monetary network. There's no reason why it shouldn't demonetize gold and bonds and equity indexes, which means that it could reasonably go up by a factor of 100. And we can debate it, but the point is, there's a risky future that is uncertain, but there is a future, and a reasonable one, where Bitcoin goes up by a factor of 100. And there's another future, if you're a panic and critic, it goes to zero. You can lose $1, you can make $100. That's a rational investment.
Yeah.
The challenge you have right now with Amazon, Facebook, Google, Apple, big tech, all these other equities is there's a future where they can go to zero, but it's not obvious to go up by a factor of 100 or a factor of 10. Not likely.
Yeah, I absolutely agree with you. I think for Bitcoin, there is this element of not only network effect, but also a very early tech investment nature, while actually being liquid in itself, right? You can actually, unlike some of those private equity or even VC type of investment that is not liquid, this one is actually very liquid too. So that gives you the benefit of early tech investment, the network effect in the future, but at the same time, liquidity. That you can actually enjoy in the public company. Ultimately, it is a outlook. It is where your outlook is for the monetary policy, for US dollar and euro in particular, in this situation. Whether we think that what we saw in 2020 is a lasting trend, right? Or it's just a one-off, maybe after it is over, this will reverse.
If you want to be bullish on an equity, you have to have a thesis that sometime in the next 1 to 3 years, the central banks are going to stop printing money and politicians are going to balance their budgets and everything's going to return to normal or quasi-normal or something better, right? You have to be very optimistic about fiscal restraint and optimistic about conservative monetary policy. And if you can get optimistic about those two things, then you can go ahead and stay invested in conventional assets.
So I guess you're not optimistic about those two items.
It seems quite likely that large countries will continue to run budget deficits. Yeah. And it seems quite likely that interest rates will remain low. Right. To quote, we're not even thinking about raising rates. And it seems quite, go ahead.
Interest rate in North America.
Yeah, and it seems quite likely that central banks will continue with quantitative easing and buying debt. And since those things, there's not even a debate about those things that I know of, in any party. So the likely outcome or the likely macroeconomic forecast is for the next 4 to 5 years, 15% monetary expansion and cost of capital is 15% and only a partial recovery and continued fiscal deficits and low interest rates Seems likely to me. So that's if you believe all those things, then the conclusion is I need a store of value that is not a fiat derivative.
Yeah.
And that drives you to scarce art, trophy real estate you can live in, or precious metals that are truly precious, or some crypto asset that is designed to be a truly scarce asset that everybody agrees with you on. And I look at that, I think it's not practical to buy scarce art, and maybe people won't want the art. It's not practical to buy billions of dollars of trophy real estate. It's not, and precious metals are not precious. They produce too much of it, and it's too easy to hypothecate them. And they're too centralized and they're manipulated. So that takes you to crypto, and the most credible crypto asset is Bitcoin, which is a crypto asset network. It's digital gold. And if if God was designing gold in cyberspace and trying to get it right and make it perfect, you would design 21 million gold coins on a crypto network where no one could print any more gold coins, and you would make it ultimately scarce. And that's what Bitcoin is, right? It is the scarcest crypto property, or the scarcest property in the universe. And all you have to do is come to the conclusion that it's the dominant crypto asset network. And that's not hard to conclude, because it's the largest proof of work network. And once you cross the chasm of saying, well, Ethereum's not going to be a proof of work network for the next 10 years. They're committed to going to proof of stake. Now you've got to compare Bitcoin to Bitcoin Cash, and Bitcoin is 25 times bigger than Bitcoin Cash. So it doesn't seem to be a complicated conclusion. I'm going to pick the dominant proof of work network if I want a scarce asset in cyberspace that's going to be an asset inflation hedge. So it's almost pretty obvious at this point that that's the only decent pure monetary asset in the world. And we have somewhere in the range of $300 trillion of money that needs it. So you have a solution. Every investor in the world has a problem. The problem's not going away in the next 5 years. It's a simple investment strategy. Just go to the solution, buy as much of it as you can, and wait for the rest of the world to understand they have a problem and understand that this is the solution. They're going to stampede onto that network. They're going to bid against each other to buy the asset up. And as the price goes up, the monetary force of the network will increase. The attraction will increase. The number of investors interested will grow. The network will grow, and it becomes positive feedback loop.
Mm-hmm. What is in that situation? Where do you see the upside for Bitcoin? It's at any point, right? Either for individual investment or treasury management. You were also talking about comparing investing in Bitcoin versus comparing in other assets or alternatives. At what point where you feel like, okay, I'm actually getting to a point where I should reevaluate the return? You were talking about 10 times or maybe more. What's your mental framework on that? A mental mark, if you will.
I think that if there's $500 trillion worth of real estate and bonds and stocks and cash, and there's a lot, it's hard to get our hands around what that number is, the sum total of all of the assets in the world across bonds, commercial real estate, stocks, indexes, cash, and derivatives. But do you have an opinion? Would you say 400 trillion? Do you have less, more?
Maybe. I guess your point is let's wait till the end of the game and see everything convert into Bitcoin.
I think my point is you have to start with a number, but let's pick a number 400 trillion. Let's say that's everything. It doesn't really matter what it is. It could be 200, it could be 500, the number is somewhere in that range. So $400 trillion of money, which is monetary energy, is invested in these things. A lot of these things are fiat derivatives. if you have a collapsing, a debasing currency, and every currency in the world is debasing, the euro, the dollar, everything that's related, they're all debasing at a rate. In that particular case, then you're going to see a progressive migration, a demonetization of those assets. And the obvious asset to demonetize first is gold. You could argue it's already been demonetized. 2020 should have been the best year in history for gold because of political uncertainty and rampant money printing. And yet gold performed awfully. I mean, it performed, you could say, well, gold is up, what, 25%, and maybe the money supply expanded by 25%. So maybe it just barely kept up, but it didn't do any more than barely kept up with the rate of monetary expansion. And Bitcoin was 10x better. So what you see is a demonetization of gold. You're going to see a demonetization of debt, say all the safe haven assets, cash, debt, gold, indexes, value stocks. If you don't own it because you're a passionate, either a passionate owner, I own the Mona Lisa, you will pry it from my cold dead fingers, or I own this stock because I think it's going up by a factor of 50. If you don't have passion, you just have money. And if you have money, your interest is wealth preservation or risk managed wealth accretion. So when I think about Bitcoin, what I think is that everybody on earth needs a store of value, and they either want to, for the most part, I'm not thinking about people who want to make money. I'm thinking about people who just want to preserve their wealth. Bitcoin is the dominant monetary network, right? People, they haven't got their head around this idea that it's an engineered safe haven asset, which makes it superior to every other safe haven asset, which makes it superior to $100 trillion of assets. So why would you hold money in any of them? And they also haven't necessarily embraced the idea that it's a digital monetary network, which means that every other financial instrument is destined to be plugged into it as a base layer. And as every instrument gets plugged into it, right, it's a monetary body like a planetary body. So the way it works is I have a planet, all the asteroids circle the planet. The largest planet or the largest planetary body has the highest gravitational force. Mm-hmm. It sucks mass in. The mass increases the gravitational force. It gathers more mass. The thing with the greatest gravitational force is going to become a planet or a sun. It will suck everything into its orbit, then eventually into its planetary body. There's only going to be one winner in that space. Bitcoin has monetary force, and the measure of monetary force is the price. And as the price goes up, the amount of monetary energy goes up, and energy is matter and is mass, and the energy is collapsing into the monetary body. It'll keep going up. It's going to demonetize everything that isn't an investment of passion. So for example, you'll keep your house because you live in it. You'll keep the Mona Lisa because you love to gaze upon it and you want to brag about owning it. You're going to keep your debt in your local school because your children go to the school and you don't want to decapitalize the school because you care about, you're going to loan money to the hospital because the hospital means something to you. You're going to buy Zoom stock when it has 10 million users if you think they're going to be 1 billion users in Zoom because you think it's good investment. You're going to buy a company that's going to be 1,000 times better than existing companies because it invented a cure to cancer. Venture capital will continue. Tech investment will continue. Trophy assets will continue. But half of the $400 trillion is just looking for a store of value. People that took all their money and they invested in the Vanguard 500 index fund, they weren't in love with the companies. They were in love with their money. They wanted their money to accrete faster than the cost of capital, and they're smart enough to know that they can't put it in a savings account in a bank, and they couldn't buy a bond from a government with it. Yeah. So what I think is going to happen is that Bitcoin is going to demonetize everything. And the point is, there's nothing, you're not going to sell it because there's not a higher quality thing to trade into. Like, there's never going to be a lower risk, higher return value proposition than pure monetary energy on a crypto asset network with 98% of the hash power. So it's kind of like saying, well, when are you going to stop using Twitter and start using the next thing? When are you going to stop using Apple and start using the next thing? When are you going to stop using YouTube and start using the next thing? When are you going to stop using Facebook? When are you going to stop using Microsoft? And the answer is people aren't stop using them. They're actually going to use them more next year because their economies, their value proposition keeps getting stronger and stronger and stronger. When someone invents a crypto asset network, which stores more monetary energy than Bitcoin, which is superior in all respects to Bitcoin by a factor of 10 or 100, the way you will know it is it will have more money on it than Bitcoin, and it will be growing faster. But since Bitcoin is the best performing asset for the last 12 years and is destroying every other asset, better than gold, better than equity, better than bonds, better than any commodity, better than any real estate, right? It's pretty obvious that there isn't something better. It's only getting stronger. So it would be a mistake, in my opinion, to think of it like a stock. I think it's a mental model mistake people make. They think it's like a stock. It isn't like a stock. It's like the formation of a planetary body or a star, and the gravitational force is just getting stronger. So, you know, you're going to jump off the Bitcoin network with the same probability you're going to jump off the Earth by jumping high. Gravity is pointing down, right? All the money is not going up, it's going down. The matter is going down. And it's pretty obvious that when the price of a stock, which has $1 million in cash flow a year, goes up by a factor of 10, the PDE goes up by a factor of 10. It gets 10 times riskier. But Bitcoin is not a stock. The product isn't, it isn't producing a product that it monetizes with revenue that then becomes cash flow that then justifies a stock. Bitcoin, the price is the product. And the higher the price goes, the better the product gets. It's a first order monetary energy network. The world's never seen it. I mean, you can come up with analogies like it's sort of like YouTube, but it's sort of like Facebook, but better. But it really isn't a good analogy. We've never seen the formation of a monetary energy system in the history of the human race. It's not even, some people call it an asset class. It's not even an asset class though, because, you know, saying, oh, it's like the commodity index that, you know, Goldman Sachs or whatever formed a decade ago. Not really, because you had your choice of investing in this asset or the third asset, and there are some assets that actually were appreciating faster than that asset. This is not that thing. This is the formation of pure monetary energy. And so the answer is you're not ever going to trade out of it. There's no exit strategy, right? Eventually, it's going to replace the Dow, the S&P 500, every monetary index, bond indexes, money, and it's going to be the base layer of the economy. You could expect it to grow to $200, $300, $400 trillion. And then wrapped around it will be cash. You'll have euros and dollars that will be, and they will form the function of currency. The way this ends is eventually there's 800 trillion or 1,000 trillion dollars of money stuff. And the core, the base bedrock, the granite is $400 trillion worth of Bitcoin. And then all of these other assets trade, I wouldn't say pegged, I would say trade against. They'll be on the network. Yeah. And price discovery will be returned to bonds and stocks and commercial real estate. And currencies will continue to be a medium of exchange because it's legal tender and you need to pay your taxes in it, and because governments will want to control their currencies in the same way that companies want to control their stocks. But yeah, the average person will have an option, which is to store their monetary value in a savings account at a bank in cyberspace called Bitcoin. And that bank will be run by software that will not inflate the amount of Bitcoin, that will be run on a deflationary schedule. And that will become the truth and the integrity and the base layer of the monetary system of the world with time. And so when it goes up by a factor of 20, you know, quote unquote, taking money off the table or whatever, it doesn't make a lot of sense, because it'll probably go up by another factor of 20, and you're going to lose 95% of your wealth that you diversify out of this thing, because I've got this phrase, right? Diversification is selling the winners to buy the losers. If you had $1 million in Amazon stock and you kept selling it every time it hit an all-time high, today you would own 95% of the retailers that are currently bankrupt, and you would have lost 95% of all your money because you quote unquote diversified to take some money off the top. And the answer is, if something is going to win, you never want to diversify. And if Bitcoin is the winning money, it's money, which means that 1,000 years from now, it may still be winning, right? I mean, it's the most pure property you can buy. The only reason to sell an asset, in my opinion, is you believe it's going to become impaired, or it is impaired.
Mm-hmm.
And if the asset is not impaired, it's always a mistake to sell if your interest is in wealth creation or wealth preservation.
Mm. Yeah, I very much agree with you, Michael. You just made a very strong bull case, actually. If you really just take that very long-term view and assume that Bitcoin will become the bedrock of everything and basically absorb all the monetary energy of that 400 trillion into it, that's a huge price tag in today's US dollar, right? That's almost like 20 million US dollar per Bitcoin. And that is huge. Now, I do want to play devil's advocate here a little bit. We've talked about all the good things about Bitcoin and your bullish case for it, and why you have deep conviction in it. Do you have, by any chance, a bear case, or even a secret remote bear case for Bitcoin? What may go wrong? Either, you've been an entrepreneur in technology space for such a long time, either from a technology perspective or sense, like what may go wrong?
Well, I'll start with one observation, which is Bitcoin is like a $650 billion digital network right now. So when you look at it, you have to keep in mind that it's $650 billion of monetary energy. So the risk of it going away is probably similar to the risk of Google, Facebook, Apple, and Amazon going away when they became $650 billion market cap companies. Something like that. Maybe even less so, because Bitcoin has 100 million plus holders of the cryptocurrency across every major country. So it has less risk from a CEO, a board of directors, a central regulator, or a corporation in that regard. But it's not MySpace, it's not Friendster. It's $650 billion of monetary energy in a monetary network. So what is the risk? Well, any reasonable person has to say, well, there's always the risk of the unknown, which is the black swan. Mm-hmm. Some unknowable risk that I can't anticipate. It's possible. That's true with Apple and Amazon and Facebook and Google and Microsoft, right? An unknown.
Yeah.
And so if that's the case, then perhaps you wouldn't put 100% or more of your wealth into it. But Microsoft is fully committed to Microsoft, and Facebook is fully committed to Facebook, and Apple is fully committed to Apple, and Google is fully committed to Google. So you can decide whether or not you want to be committed or not. It all comes down to that. They all have unknown unknowns as risk in their future. I think, having said that, right, the most likely near-term or mid-term sources of volatility would just be regulatory concerns, FUD, fear, uncertainty, and doubt. Well, what if this country does this? What if that country does that? What you see is FUD. Oh, I heard this exchange crashed. I heard this regulator was going to tax this. I heard this person had this opinion. I'm worried about this. I'm afraid Dr. Evil will invent a quantum computer. You know, fears about fear. Fear is the near term. And I think that if you have fear, that's a reason not to put 100% of your money into Apple or Amazon or Facebook or Google or Microsoft or Tesla or anything. Maybe you don't because you have fear. But, you know, at the same time, I wouldn't tell everybody how to make their investment decisions. Everybody has to decide, you know, how much do they fear the future of a digital monetary network versus fear the likely future of an aggressive expansionary monetary environment. I feel like there's 100% certainty that 75% of your fiat derivatives and fiat investments are going to go to zero.
Yeah.
That's what I think. It's highly likely that you'll lose 75% of all your fiat investments. As for the fears of the other things, I think most of the articulated FUD is irrational and irrelevant at this point. And I think the black swan, you know, I can't dismiss the black swan, but you know, when I get done with this call, I'll get up and I'll walk down some steps and I could trip on the steps and hit my head and get an aneurysm and I could die. And I don't live my life in fear of moving from place to place because otherwise there's no life left. So you're going to make your decision and do something. I'm certainly not going to give up 75% of my wealth because I have a fear of an unknown unknown.
Yeah, that's well said. That's well said. Now, talking about Bitcoin and kind of the conviction in it. So it's important to continue to build on top of it. As a result of that, we've been sponsoring developer in the space. We've been working with projects that actually build on top of it. Recently, we listed Blockstack's Stack 2.0 after their mainnet launch. Things like that, I think, is really important. You know, build a smart contract on top of Bitcoin as a kind of exploratory direction. I'm wondering what's your take on that? What's your outlook in around that kind of topic, and how you see this go forward?
I think that Bitcoin is a monetary network, and the life in the network comes from all of the individuals and all of the companies that plug into it and all the institutions that plug into it. So the exchanges are a source of life, and the large holders are a source of life, and public companies are a source of life, and the developers are a source of life, and there are investment companies that create products, either Grayscale or PayPal or Square, are a source of life. And it is rational that they should invest in the network. The miners are a source of life too, by the way. It's rational they should invest. They all will invest. There are two obvious areas of investment to me. One is in the functional improvement on-chain and off-chain, right? But by the way, functional improvement off-chain is every time your exchange improves its functionality, right? When Square or PayPal upgrades their product, when Grayscale upgrades their product, when Coinbase or Binance upgrades their product, they're creating off-chain functional improvements to the digital monetary network. Absolutely. And those improvements accrete to all of Bitcoin and every Bitcoin hodler, right? You could hodl Bitcoin and do nothing, and something that happens at a company you've never heard of could double the value of your Bitcoin because people are improving the network. Yeah. So I think that those will continue. The on-chain improvements at the base layer, I think they come in a few ways. I mean, there's support for developers, and there's also, well, maybe three ways. I would say there's support for developers to improve Bitcoin Core, add features to it, you know, Taproot, etc. Then there are investments in security of Bitcoin Core. Right. That is the quality assurance, the security, the testing, the robustness, the resiliency. And in fact, you know, whereas I could have 1,000 engineers add features to Bitcoin Core, I'd probably rather have 1,000 engineers test the work of 100 engineers, and have the 1,000 engineers test and protect the network and only have 100 engineers add features to the network, right? And so that's all called Bitcoin security.
Yeah.
And then the third area of investment is open source projects like Lightning.
Yes.
That are not captured by any company, that are cross jurisdiction, that are gifts to the world, that are open source, that are not necessarily Bitcoin core, but they're complementary to it.
Yeah.
And here's how I think about it. I'm a big supporter of Bitcoin security, right? So I personally have pledged $1 million to the MIT DCI initiative, especially the security initiative at MIT. And I've been a big advocate, and I've gotten a lot of associates of mine to also pledge to support that security initiative, which is to finance a team of senior engineers just to protect the network.
Mm-hmm.
And I will continue to support that and like investments. I evaluate, and our company evaluates making off-chain improvements to Bitcoin through MicroStrategy, and we evaluate making on-chain improvements to Bitcoin Core. And as I see engineering organizations or developers that are doing things that we support, we're open to, and I expect we'll finance those. I'm also supportive of Lightning and other open source extensions.
Mm-hmm.
And I think that you just have to consider how you're going to support those. And you could even support them through organizations that are 501c3s or nonprofits, or through companies. And I think you also have to be aware that they're competitive with PayPal and with Square, and to a certain extent with your exchange and every other exchange, because they're all just different ways to move value off the chain with high speed. And I think there are certain things that Lightning can do that PayPal or Square can't do. And there are certain things that you can do that Square can't do. And there are certain things that should be done by for-profit entities. And there are certain things that should be done by centralized entities with compliance and KYC and AML and the like. And there are other things that will be done in an open source context, and the world will evolve. I'm happy to support all of it. We'll see how it all works out, right? One has to be very thoughtful.
Yeah.
I would say my view is I'm not in favor of unfettered development of Bitcoin Core. I mean, there are other crypto projects that I feel they're highly financed, or the developers are highly financed, and they're developing lots of complicated functionality. And I actually think, I've run a software company for 31 years. Unleashing unlimited money on the engineers doesn't necessarily make the product better. It may destroy the product. And so probably the biggest risk to Bitcoin right now isn't the lack of any functionality. The biggest risk to Bitcoin is too much functionality. If you were to introduce a new piece of functionality that actually introduced a security bug, or introduced some kind of instability into the network, that would be devastating. Whereas I believe that Bitcoin, with its current functionality, is going to be augmented off-chain by all of the partners, every exchange, every mobile app company, every institutional company. They're going to augment it with a mixture of products and services that will allow it to become a $100 trillion to $300 trillion network. And so if you had a product which was good enough to be, hundreds of times better than it is right now, you wouldn't risk it for one new bell and whistle. I mean, it's just not worth it. And so I think that the balance with regard to Bitcoin core development ought to be on moving forward carefully.
Yes.
Very carefully, as opposed to enthusiastically.
Yeah.
Measure twice, cut once. Don't break anything.
Yeah, absolutely agree. Yeah, that's one of the observations that we have been made during our course of sponsoring the developers in Bitcoin Core. It's definitely a very conservative and careful development culture. very different from what we see in DeFi, for example, on Ethereum. It's very careful because it's the base monetary layer. You don't want to make too rushed a change. And I also agree with you on Lightning. To be honest, we are an exchange, but we don't feel like Lightning is really competing with us, or we are competing against Lightning. We're actually enabling Lightning on OKCoin. I think it adds great utility to Bitcoin and to the further adoption of it, and also makes it easier to transact, particularly as the network continues to grow.
I think the best hope for Lightning is for the exchanges to embrace it and use it as a transport protocol, because they will bring infinite amounts of financing and testing and QA to it. And that'll give the entire thing a boost. It'll be good for the world. So on this subject of crypto, I think an important point is there's a lot of people in the crypto community, all the altcoins, and they really can't conceive of the benefit of simply putting $1 million on the network and not moving it. It's back to the Roger Ver Bitcoin Cash argument. I see it all the time still on Twitter. It's like, well, if the money doesn't move, it has no value. And they just can't conceive of the idea that some people, it's like some people just want to be rich. Like they don't get the idea that if you had $1 billion, you would just want to keep the $1 billion and look at it and not move it. And that idea of just owning something as opposed to moving it around is almost impossible for them to conceive. But you know, Hong, here's one of the reasons why I think they don't understand it. It's because they live in a world where they haven't been able to finance their crypto assets. They think that if I have $100,000 worth of a crypto, the only way for me to monetize it or is to sell it. So they're traders. A lot of the crypto world is dominated by traders as opposed to by investors. And the exchanges could change this. If I have $1 million and I'm able to borrow $100,000 against the $1 million of Bitcoin, then I start to realize that, you know, I could just buy $1 million of Bitcoin. I could never move it for the rest of my life. I could never move it for the next 100 years. I could give it to my daughter, my son, my granddaughter, my grandson, and it might never move out of cold storage for 100 years. And I could simply borrow 100,000, 10% of it. And then every year, as long as my rate of expenditures in my life goes up slower than the rate that the asset appreciates, I could borrow money against an asset that never moves on the chain forever, and my debt to equity ratio will fall. And the blockchain will have literally one transaction on it in 100 years. And that one transaction will be, I put 100 Bitcoin or 10, or I put 1 Bitcoin on the blockchain. And for the next, I mean, imagine the next 1,000 years, my family's rich and we live off of money that an exchange loaned us, or that a bank, right? At that point, the exchange becomes a crypto bank. The bank loans us money against our assets, which are going up at 20% a year, and our expenditures go up at 5% a year. And we just get richer and richer and richer forever, and there are no transactions on the chain. And do you need any features? Not on the blockchain. You don't need any Bitcoin core features. OKCoin needs that a feature. You need to give people loans at 5% interest. If you don't do it, someone else will do it, and then they'll do one transaction in a decade, and they'll move their 1 Bitcoin to a different bank that gives them better advance rates, and that's it. And by everybody with a lot of money, I mean the family that owns the profession, the Patriots, Bob Kraft, he doesn't sell 5% of the Patriots every year to pay his expenses. He holds it for 40 years.
Yeah.
And the same is true with families that own real estate or families that just own stocks. They just own it, and then they borrow against it, and they never move it. They might do one transaction 30 years ago, and they're still financing off of that asset off chain 30 years later. And so I think that if people in the crypto, as the crypto exchanges, as they develop better financing and better banking services, I think that that will cause people's time preference to change, and they won't feel a need to trade in and out of all of these assets, and then they'll settle down for the long term, and they'll focus on wealth creation and wealth preservation instead of trading, because not only is trading risky and complicated, but also it drives taxation and tax complexities, and that's just a very, very difficult world to make money in. You have to have quite an edge and be very good at it, and the average person doesn't have that edge.
Yeah, I agree. Yeah, there are actually products out there to meet what you're just describing, Michael, but I guess the scalability is still developing, right? On the centralized exchange, there are margin products where people actually put down their Bitcoin and borrow other assets to sell and buy. And then in the decentralized world, DeFi world, you actually can wrap Bitcoin into WBitcoin, for example, WPTC, and then stake and get yield on top of it. So, but I assume that this will continue to evolve.
We're early days there, right? I mean, we probably got 10 years, 5 to 10 years during which the industry is going to mature and stabilize, and there'll be less risk and less concern and more stability. If you look at the way NASDAQ stocks are, right? 30 years ago, people had NASDAQ stocks, and today you could go to a big bank and you could post $1 million of NASDAQ stock. You could borrow $500,000 against it at LIBOR plus 50 basis points. I mean, which is in essence less than 1%, right? You could borrow any amount of money up to loan to value 50 to 70%. Sometimes if you had Apple stock, you could borrow 80% of the value of the Apple stock at less than 1% interest from any of a dozen different banks. And you trust them, and you're not concerned that you're going to lose your Apple stock, and you're not concerned the bank's going to screw you. So there's a very mature banking sector for other assets like stocks and bonds and real estate. There's a very immature banking sector for Bitcoin, but it's an opportunity, and it's going to happen. It's going to take some number of years. When it happens, people will settle down, and it'll be beneficial to everybody that holds these assets.
Yeah, awesome. Look, I think we are running against time here. It's been a real pleasure talking with you about Bitcoin. I think we all look forward to how things will evolve, see what 2021 will bring us first, and then what comes next.
Thanks for hosting me today. I appreciate the